What's up, everybody? Michael here. The S&P 500, you guessed it, continues to be in a trading range that the world is watching very closely. What will happen next? We're going to discuss that on today's episode. There are some interesting divergences that are building, and I want to walk you through those. I'm assuming that the market's going to break out of here with some wicked price action in the very near future as we're approaching, as we stated yesterday, a lot of different data points coming out, right? We have CPI on Friday. We have OPEX coming in next week. We have Fed meeting. We have all kinds of stuff going on. Whew, what a day today, right? It's just inside trading day. We're gapped down, ripped up a little bit higher. Everyone got excited, and then it completely faded on itself. We are now trading below the 5-day moving average. That is actually more bearish now, but really we're just in a sideways chop range, okay? It's still bullish consolidation overall, but getting under this flat 5-day moving average, right? Inclining is bullish, flat is neutral. That's where we're at. If it starts declining, be very aware, right? Or be cautious of that. It is forming somewhat of a little bit of a bear flag there, but we'll see what the overnight session does. We really got to start cracking down under this 407, potentially even over to 405, right? That's a key level. And then we have our weekly expected move down there at 400. Keep in mind, the upside is always potential too, around 420, and this gap up here at around 430. But right now, we are just trading this chop. Now, a few interesting things that I want to call out here is, one, the VIX, right? It continues to just kind of sink off, right? Volatility is just kind of fallen down. We still have a positive divergence there, which means that we can pop up anytime. But the volatility of volatility, interestingly enough, was up on the day. So volatility is picking up, could indicate that we have some hedging taking place. The dollar continues to just trade sideways along with the S&P 500. It is butting its head up against that declining 20-day moving average. If it gets that, I think that pushes the dollar up higher. And that can take the S&P 500 down because we've seen that inverse correlation play out. The 10-year yield is another one that, it's just holding at 3%, which closed at 30.29. But this, it's going to fire off in a direction here soon, too, with this CPI data. So be very cautious here. We've already seen a nice big run up in the 10-year yield, but tech really hasn't been affected all too much like it has been in the past where we got these the 10-year yield rips up higher, and then it really does put a lot of pressure on tech stocks. And tech stocks, when you look at like the S&P 500, the biggest market cap stocks are those tech stocks, so it can bring down those large indices. If we continue on, also oil continues to perpetuate to the upside, which is never good for the consumer. It's not good for various equities as well, other than some energy names. So is this going to start backing off at some point? Well, I'm not stepping in front of this freight train to catch a few pennies on the short side. I am going to be patient and wait for some things to happen on smaller time frames to start looking at short opportunities. More specifically, you can look at, if you are shorting something like oil, you can look at something like SCO. I'll draw it out on the screen, right? SCO is an inverse oil fund, I believe. And then there's also, XLE you can short if you have the ability to short in your account. So I'm sure that there's going to be plenty of opportunities, but right now that's where the strength is at. So you got to be careful, okay? So yeah, as this continues to perpetuate up, that could also put some pressure on the equity markets. Now the Qs also trading below that neutral 5-day moving average. We have the negative divergence on both the Qs and the S&P 500. This is moving flat. Momentum has been dying off, right? That makes sense. So this can resolve itself either way. But just take note, right? If we start cracking around 305, we've seen some sharp hits to the downside. So around this lower channel to potentially this gap fill around 300 can be a level of interest to keep an eye on. If you take a look at the semiconductors, it's a big portion of the NASDAQ composite. It is forming somewhat of I'd say a head and shoulder pattern, and we're well below the 5-day moving average now, so we can't come back up, and that can hold as resistance as it has been. So this went from positive, right, a bullish, to neutral, and the more we stay below there, this is going to start declining now as each day progresses forward if we don't start obviously getting back up there quickly. So this could be a good short opportunity. I marked a little target here, right? That matches up with the volume shelf profile. It's a measured move. The measured move would take you to around 226, but also it's in confluence with this measured move. If this is a bear flag and it breaks down, it'd take you right here too. So if you're looking for a short opportunity, right, shorting in this market, it's rough to short in this market, so be very focused on position sizing because We get some rip your face off rallies, could scare people out of positions. If you're looking to play bounce trades, you can potentially look at this volume shelf profile or this box here. Just be mindful of risk if it keeps continuing to head down, because yeah, I mean, there's been a lot of just open interest building, right? So this coming out of one of these ranges could be quite the gamma squeeze in either direction. If we take a look at the IWM, I have that rising wedge structure. I just redrew it out, contracting. We broke down from it, and guess what? We're trading just slightly below the 5-day moving average. I'd give that we're closed on it, and it is still inclining. So this one overall is the more stronger one from just a price action perspective as of recent, right? We've been kind of just floating up higher and higher, and we're still really kind of holding that. So we'll see here if we can get a couple more daily closes below it to see if we get some further price movement to the downside. Now, if we do get price action to the downside, I'm looking at around 178 to 179, this range here, right? Why right there? Well, we have a gap fill, and then we have prior areas of resistance that really did hold up well. We built that volume shelf profile here, and then when we got through that level, we exploded in price action, okay? So there's somewhat of a, air pocket as far as volume goes right here. So if price action were to get below any lower and we see this quick sink off, I'd be looking down here as a target. I do have a short position on still. It's basically even at this time. I scaled into it. I may be getting out soon if price action obviously breaks up higher. And I'm also short HYG. I still have that position on. That is in the green, and I'm considering moving that stop to break even. For those that know that, that are in my Discord, they know that I've took those trades. I shared those. But yeah, there's an update on that. So let's talk about all these divergences that I'm talking about. Okay. This is interesting. We're looking at the NYA, okay, so New York Stock Exchange. Then we have the summation index, very important to take a look at, right? And then we have the NYMOT, also really good indicator that works well with comparing it to the summation index. Well, first and foremost, summation index is still below zero. Nothing really good happens if you hold below zero on a summation index. As you can see, we crossed through it here. We didn't even hold above it. And from that point, well, we've been going down, okay? Now, what I want to say here is, we are still, the parabolic star, it's still pointing upwards. We're starting to kind of maybe potentially flatten out here as we're coming up into prior area we flattened out. But what I want to say here is this will start to flatten out the more that we see price action obviously, continue to consolidate sideways. However, I'm thinking that it's very possible now because I'm looking over here at the NYMOT, the McClellan oscillator. You can see peak 1, peak 2, peak 3, all lower highs, sorry. And then you could see the price action was putting in obviously higher highs. So there is a divergence there taking place. Price action's getting stronger to the upside, but you can see the internals are weakening, and this divergence can well resolve itself to the downside. A couple other indicators that I want to go over is the BPCOMPQ. This is the bullish percent index for the NASDAQ composite. I wanted to call out, I posted this on Twitter. We are in that overextended area, but I wanted to just highlight all the times that we kind of got into overextended territories based off an RSI. And, use quotes when you say overextended to the upside or downside, because things could stay overbought and oversold for a long time. But you can see the green lines were those buy signals, right? So boom, we moved up, boom, we moved up. The red is the sell signal, we moved down. I personally like to look for positive divergences where the action goes lower, but the divergence obviously is higher, and that's a positive divergence. We pop up to the upside. Okay, and we had one here too. Price action was going down, and boom, and then we saw these couple rips right there, a little bit higher too. So if we're looking at sell signals, because that's where we're at kind of right now, the last one was right here. We stayed there for quite some time, right? So we got there and we started drifting up higher, and then we sold off pretty hard and fast. So we are there, which tells me, okay, put your foot on the gas, or to put your foot on the brake a little bit, slow down, and just be aware of these divergences taking place, be aware of the price action, and beware of some data that's about to drop. A couple other things I want to go over here is the S&P 500 over TLT. This is a ratio, and I highlighted 1, 2, 3 areas, okay? These are divergences. When the ratio puts in a higher high, but the S&P 500 does not, there has been price action resolved to the downside, right? So it moved up higher, S&P 500 did not put one in, and price action resolved to the downside. The reason why I'm bringing this up now is because the ratio is moving up higher. The S&P 500 has not moved up higher, which is a subtle, small divergence. Is it going to result to the upside, downside? I don't know. I'm just looking at all these different signal charts that I have, and it's just telling me be more cautious here, be more cautious, be more cautious. Okay. Housing index, also subtle divergence, right? This is an important one to track. Very similar to what we just showed, right? The S&P 500 kind of put in a small high right here, but you can see the housing index did not. Okay, and then it's really sideways. So if you just drew this sideways, that's totally fine, but you can clearly see that this did go lower. So a very subtle divergence there. If we actually zoom out a little bit and look at the daily time frame for the housing index, you can see it is in a downsloping channel. So what would be very bullish for the markets is if this thing were to break through to the upside. I think that would be pretty positive. So we'll continue to watch to see if that happens. But as it stands right now, it is still holding as resistance on the upper portion of that channel. The last thing I want to talk about is the Trin Indicator. When we get to these overextended areas on the trend, we have seen some sell-offs take place. Lets us know to be more cautious. And I tell you what, we didn't get there over here when I talked about it. We're a little bit closer now, but we're not quite there either. But it is one of those things to just continue to be cautious on, right? So that's all I got for you on today's episode. We continue to just chop in this sideways range. Be careful here because things, when they break out of these and we get this data, it could be an aggressive move. I will say from a shorting perspective, it's looking good for the SPY and the Qs right now, as long as we can hold under that 5-day moving average, as well as the semiconductors. Hope today's episode helped out. I'll be back here on Thursday.